that the silver registered category on the COMEX now back down under 34 million ounces again at 33.1 million ounces. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, checking in with some of the latest silver news and data. And certainly one of the more interesting things to come out in the last couple of days, which happened on Tuesday, is that the silver registered category on the COMEX now back down under 34 million ounces again at 33.1 million ounces. We did see a 2 million ounce deposit into registered a few days ago, which may well have been associated with the deliveries for the December month. But as the data came out on Tuesday, we see that once again down to 33.1 million ounces. Taking a look at the chart here, as we have talked about plenty on the show, it's back about 150 million ounces in the February 2021 silver squeeze. Had been going down consistently really until we saw that 2 million ounce deposit that had put that number back up above 35 million ounces. But again, while this has not been updated on Gold Charts or us just yet, we are back below 33.1 million ounces. So continuing to see that flow of metal out of there. And as I mentioned, we did have December deliveries begin last week. So far, not a big number. We've had 2,915 contracts delivered, lower than most of the other active delivery months in silver. And there are still 2,188 contracts open for delivery. So we are still slightly above the low points we saw back in 2011 and 2016. But just interesting to see the metal continue to dwindle out of that stockpile amidst everything we've seen this year, obviously with the big inflows into India and elsewhere, at the same time that we've seen the stockpile from the LBMA vaults dwindle as well. And we are in the first week of December. So the latest figure from the LBMA will be coming out in a few days, and we will be sure to report back on that as it does. Quick look over at the COT report. We can see that the bank's still slightly long silver, about 3,000 contracts, not as long as they had been, but still remaining long, which again has historically been a good sign, and perhaps not a coincidence that as the banks were long over the past couple of months that we did see that rally. Although one group that was on the losing side of that recent rally is TD Securities, as came out on Friday that they got stopped out of their tactical short position. Bank said it was booking a 14% loss after an epic positioning squeeze contributed to a 25% rally from the October lows. TD was short silver as they expected U.S. interest rates combined with the growing threat of a recession would significantly weigh on the precious metal, which on one hand sounds reasonable. I tend to think that a lot of what we're seeing is that the Fed, while not done hiking and has its next hike coming next week, but you can see the light at the end of the tunnel, even though there's debate over what will be the terminal rate. Yet with Jerome Powell signaling that the December meeting may well be 50 basis points instead of 75, and with some of the following rate hikes also priced in, the combination of that and some of the strong metal demand has helped push the price up in recent weeks. Although one interesting note that I did want to pass along, this is something I was watching from an LBMA presentation about a week ago, and they had an interesting comment that I'm going to play here.
The early part of September through to the peak in the rally, which was sort of mid-October, the silver price actually moved by 5%. And a lot of that was driven by the short covering coming through the financial sector. So that's one of the reasons why spot prices don't necessarily reflect the fundamentals. They always do at bottom, but you've got this noise that's built in because of the activity in the futures markets.
Because the tail is wagging the dog then, right?
Yes.
Which I thought was interesting to even hear the LBMA admit that the pricing has less to do with supply and demand and is the proverbial tail wagging the dog, which obviously, if you watch this channel or some of the other metals channels out there where we talk about this regularly, that the paper and physical markets are often quite divorced, not necessarily coming as new news yet. Interesting to hear that even the LBMA saying as much. So in case you've been feeling that way and not agreeing with some of the comments coming from the banks, at least sign that we're on the right track here. In terms of other thoughts that some of the banks have on the gold and silver markets, was interesting to see this one last week. This was Bank of America's top trades for 2023. And if you scroll down to number 5, is talking about long gold on US dollar peak, China reopening, metal inventory shortages, energy transition acceleration, need in 2020s for inflation hedges. Interesting to see them also mentioning the metal inventory shortages. And not the only bank to be talking about this. Mentioned earlier this week on the show with Steve Cope of Silver Viper that JP Morgan had been raising their silver target and gold target as well, I believe. And I know a lot of you saw the Goldman Sachs estimate that they expect a Fed pivot and a higher gold price. So interesting to see even some of the banks talking about this. And I would suggest rightfully so, given the current environment we have in terms of inflation and also the central bank demand, which showed that there was another addition in October. So a lot of parties out there buying gold amidst some chaotic currency times. And anyway, you can see that some of the banks even picking up on that too. And in terms of one of the things that is causing some of that volatility, here we have the M2 money supply, which if you zoom in, you can see that it has finally started coming down. Obviously, this is something that Rafi talks about quite a bit on his weekly Friday show, but we are seeing money withdrawn from the system, perhaps not at a overly significant pace. Again, here you can see that here's back in 2008 during the housing crisis at around 8 trillion. And obviously that was going higher consistently over the past decade, getting up to 15 trillion before we had COVID, bring that up to over 21 trillion. Yet again, perhaps not the biggest reduction just yet, but we can see in March at 21.7 trillion and going down to current level of 21.4 trillion. Certainly, we've seen the effects of that in the stock, bond, and real estate markets, where we've seen pressure all year on those, and not entirely unexpected, yet just makes you wonder if this is the effect that we've seen so far just with that slight reduction in the money supply. If the central banks were ever to really withdraw a lot of the liquidity that's been added, a little bit scary to see how that would play out. Similar trajectory over here on the Federal Reserve's balance sheet. You can see here they are back in 2008 at 900 billion, went up to almost 9 trillion. And we'll zoom in a little bit on this one. You can see has come from a peak of 8.965 down to 8.58. So we are seeing liquidity come out, which is again why groups like TD and others have been shorting silver and gold. Although it will just be fascinating to see how far they will continue to go in terms of their quantitative tightening and the interest rate hikes. And I imagine that will be a big part of the narrative driving the markets in 2023. I think there's a good chance for gold and silver to do well, even if you get a pause in the interest rate hikes, which I think is largely reasonable to expect at some point in 2023. And certainly if you do get the outright pivot, that would be a big driver for the metals prices going forward. So we'll be keeping an eye on all of that for you as we head out to the rest of 2022 and into the new year. And real quick, before we wrap up, would like to mention that we did have news out from Blackrock Silver. Mentioned last week that they had completed a drilling program at their Silver Cloud location, and they did get the results in where they found a new vein that comes in at 52.6 grams per ton gold, 606 grams per ton silver over 1.5 meters in the Northwest Canyon. That was the drill hole SBC 22-20, which I talked about last week on the show. Represents a new high-grade vein discovery that will now be known as Zeus. And Andrew Pollard of Blackrock mentions how Silver Cloud has now returned their highest grade gold intercept to date and in the process has established a new bona fide high-grade discovery on one of the most prolific gold belts in Nevada, with indications that the system has plenty of room to grow from there. Here in the map, you can see that drill hole is right down here to the western side of Silver Cloud. And to find out a little bit more about the results they released this morning, well, you can just click on the video that's coming your way now.